What's up, everyone? My name's Robbie. This is Robbie Manila, and today we have an exciting video today. I'm very excited, as you can see, because we are going to be showing you the grand finale, not the grand finale, the grand opening, not the grand opening, the reveal of my brand new stock ranking system. So I've been thinking about this for a very long time. It probably even goes back to when I started my website, which was 2016, I believe. So since 2016, I've been kind of like, it's been in the back of my mind how to kind of create a stock ranking system, something that I can do on a daily basis whenever I want to. I open up a spreadsheet and I just go through the different things inside the spreadsheet, the categories that I have, the things I want to see in a stock. And it took me a while to finally figure out exactly what that was going to look like. I tend to get paralysis by analysis, where you just look at so many different things and you just don't know what to make of them at some point. Like when you look at like every single ratio, like what does it do at the end of the day? Like there are too many things that you can consider, and I needed to just like finally distill it into the main things that I care about and like not really care about a lot of the other stuff. So I think that I've gotten that down mostly. I'm calling this the beta version, so I'm not 100% sure if this is exactly what it's going to look like in like months down the road, but I put some time into this. I think what I have is like a pretty good system. So let's go ahead, let's get this thing started, and I'm going to show you the system. Before I move on, I really need to hear from you. I have like some important things I want to ask you, and I'd really appreciate it if you left some comments below. So what I'm wondering is, I know a lot of you watch my videos because I talk a lot about ETFs, about funds. Some of you watch my videos because I do reviews of different brokers, and some of you watch some of my stock videos. And I haven't done as many of the stock videos, so I know some of you may not be as interested in that. So what I'm wondering is, are you interested in seeing multiple stock videos in a week or not? My idea would be to maybe the start of the week, I would do videos on like ETFs, just general finance, personal finance, whatever it is. And then towards the latter part of the week, I would do like multiple different maybe stock analysis videos. So I'd love to hear from you in the comments. It would really help me out if you let me know what you think, and I really appreciate it if you left me a comment. Okay, here we go. So I'm excited. So there are 3 different steps in this process, and the main thing that I'm really excited about today is the spreadsheet I made, which is the stock ranking spreadsheet essentially. Now, I'm going to show you the 3 steps in the process first, then I'm going to go through the spreadsheet. Okay, here we go, everybody. So the first step I have is, I call it the Cat 5 score. This is that stock ranking system that I've told you I've created. And so we're going to take a look at the spreadsheet in a second, but basically what this Cat 5 score does is it takes a lot of different things that I want to see in a stock, and it allows me to do it pretty quickly, and it allows me to kind of compare it to some other important things that I usually want to see, but I never have been able to figure out how to find the data like quickly and easily, and I don't have a Bloomberg terminal or anything, so I can't suck data out of like really great places. So I finally figured out, I think, one of the big problems that I've had for a while, which is where to find some of the data. So I'm excited about this. So that's the very first thing I'm doing. I created it to make it pretty quick. I want it to be like 10, 20 minutes. I get this thing done, and then I move out. I can figure out if I kind of like a stock or not pretty quickly. Next, step 2 is a discounted cash flow, a DCF. You might know what it is. Essentially, it's just taking the cash flows of a company and projecting them into the future and figuring out what they should be in today's dollars. Next, we have step 3, which is some technical analysis to see what's going on in the chart. So that's it. Those are the 3 steps. I'm trying to make it so it's pretty quick, and now we're going to go through the spreadsheet. I'm going to be using a specific stock in this video to kind of show you how this ranking system works. Now, I want to say thanks to one of the viewers of the channel, Dos Alea. So this person has had a few different comments asking me about 3 different ticker symbols. So I'm going to go over one of those today, which is ticker DE, which is John Deere. So we're going to use that as our example today for this spreadsheet. So when I go through the spreadsheet, I have 4 different areas that I rely on this data from. So the first thing is gurufocus.com. Next is quickfs.net. Then we have Yahoo Finance. And finally, we have a spreadsheet from Aswat Damodaran, who, if you don't know who that is an amazing NYU professor who works at NYU Stern and has like all this great valuation, free valuation stuff. So if you ever want to look for that, I'm going to put a link below to his website so you can find some of this stuff as well. Here we go. Okay, so this is my stock ranking system. I'm going to reveal it as we go along in the spreadsheet. So the first thing we have is there are 5 different categories. First category is what I call the Rolex score. Rolex, a Rolex timepiece. To me, it instills both quality and trust. People trust that company. It's got an amazing brand. And of course, it's amazing quality. I don't think anyone argues about that. So Rolex, which I don't own, wish I did, but I don't. The Rolex score is the first score that I have. So the Rolex score is comprised of 2 different components. So the first one is the F score. If you've watched my channel before, you know that I like Piotroski F score as a way to kind of start looking at stocks. So F score to me gives me a assurance that the company is hitting certain things. So I'm not going to go through all of what F score is, but I made a video on it. Take a look at that if you want to. So let's go through John Deere's quality score. Now the thing is, for this particular category, I do not have industry averages, but I'm going to go through that in a sec. You will see some of these have industry averages. Don't worry about that here. So we're going to go find F score. I'm going to go to Guru Focus. I'm going to find the F score of John Deere. So here on Guru Focus, I see Piotroski F score. It's an 8 for Deere, so I'm going to go over and I'm going to put 8. Next, we have the shares outstanding. Are they increasing? Are they decreasing? Going to go to QuickFS to find that. So in QuickFS on that, I hit income statement, and then I go down here, and it says shares diluted. I want to see over 5 years, have they increased or decreased? So I'm going to go here, 2021, 1, 2, 3, 4, 5. 323 million shares, now 314 million shares, meaning that the shares have decreased, which is good. I like that. So now I have decreasing shares, and I have a Piotroski F score of an 8. So how do we score this? So what I do is, these are the different amounts that you can get. If you have a 0 Piotroski F score, you get 0 points. And if the shares outstanding are increasing, you get 0 points. Now, because the F score is over 7, we get 5 points because Piotroski F score is an 8. And because the shares are decreasing, you also get another 5 points. So here I put my scores in. So 5 points, 5 points, 10 possible points for this category. And so I have a category score of a 10 out of 10, which gives me a quality score, a Rolex score of 100%. Pretty cool so far. I hope you like it. So we're going to go to the next category. So this is where we have an industry-based valuation. And this is one of the things that I've tried for so long to figure out how to do this quickly, efficiently. So the score is based on the average metric of a specific industry. So for example, Deere is farming/agriculture, and it's in the industrial sector. So farming/agricultural is where this is actually part of. So these different factors, so the PE ratio, forward PE, price to sales ratio, and the EV to EBIT are the things that I care about for this. You get 0 points if you're double the industry average. So if the industry average PE ratio is at 20 and this company is selling for a 40, you don't get any points. Now, if the PE ratio were between 20% more than the average and double the average, then you would get 2 points instead. And if you're 20% over the average, if you're less than that, then you get 5 points. What I did here was I was basically penalizing companies that have really high ratios that I think are higher than the industry average. This could be bad, of course. This could be good. Some companies can be justified having that. This isn't perfect. No ranking system is going to be perfect, but that's what I want to see for myself, so that's how I design this. So segue, I really want to explain this because this is one of the more important parts, I think, of this stock ranking system. I've always wanted to have a way to take a look quickly at the PE ratio and for it to tell me something. Not just like every PE over 20 is bad. Every PE over 30 is bad. To me, that's not at all like how it should matter. It's really the peers of the industry or the competitors, right? So if I see a PE of 40 and all the competitors are selling for 55, it's under the industry average, right? Of course, the industry could be overvalued, but it tells me more than just like, oh, I only want a PE of this much. To me, that doesn't make any sense. So I wanted to base all my metrics on something, and what I've been able to figure out is that I'm going to base it on the average of the other companies that are in the same industry it's operating in. So where do we find industry averages, you may ask? Well, we're going to use Mr. Damodaran's website. So what we have here is the NYU Stern website, where Professor Damodaran is a professor, and this is PE ratio by sector US. They update this every month, so it's amazing that they do this for us. So we can go here and we can say current PE, and then we can look at the forward PE. Now I want to do this by industry, so I want to see what the industry that John Deere is operating in. And to get that, actually, I went to this Excel spreadsheet provided by Professor Damodaran that's on the website. And I'm going to type in Deere, D-E-R-E. And now I see John Deere Company right here. And so I can see what industry Deere falls into, farming/agricultural. So I know that John Deere is in farming/agricultural. I have the PE here. So I'm going to Control F, farming/agricultural right here. So this is the PE ratio of the industry. This is the forward PE. So I got everything I need, 20.27. The forward PE, 20.58. So that was the current PE, the trailing PE. Now we want to find the price to sales ratio. I'll go to another one of the website pages. This one is revenue multiples by sector US. Same deal. I got the price to sales right here. Control F, farming and agricultural right here, 0.97. So I have 0.97. And now I need to find the EV to EBIT. Back to a different one of the pages on NYU Stern, we have enterprise value multiples by US sector. I'm going to go over here, EV to EBIT, Control F, farming, and here we go. So 16.35. So, I mean, how cool is this? I got all the industry averages for the PE, the forward PE, the price of sales, EV, EBITDA. It's pretty quick. It's all right here now. So now I'm going to go find the actual ratios for this company. I'll start with going over to gurufocus.com. I got PE ratio right here, 19.58. Next we have the forward PE, 16.72. We have price to sales ratio of 2.68. Finally, we have EV to EBIT here with 20.63. All right, so let's add up the scores. The PE ratio is less than the industry average, so you get 5 points. 5 points, not more than 20% over industry average. The forward PE is less than the industry average, 5 points. The price to sales is actually more than double the industry average, so actually we're going to put 0 here. That's not going to get any points. And then EV to EBIT, how much more is 20.63 than 16.35? Is it more than 20% more? And it is more than 20% more, so actually that's going to be a 0 as well. So for Deere, on a valuation standpoint, we have 50%, a 10 out of 20. Next we have profitability. So I want to see two things. I want to see gross profit, and I want to see the net profit margin. Super excited that, of course, we can find this on NYU Stern's website. So let's go there. Here we have margins by sector US. We got gross margin here. We got net margin here. Control F, farming. 13.61 gross margin. So 13.61 is the gross profit margin, and 6.03 is the net profit margin. So this one, I'm just going to go to Google. I'm going to type in DE stock gross margin. One company that usually has it pretty easy to find is Macro Trends, so I'm going to go there. And on the top here, we can see the gross profit margin, 33.86. Next, we have the net profit margin of 13.54. So let's add this score up. We can see that the industry average is 13.61. The actual is 33.86. That's great. So this gets a 5. The industry average is 6.03. This is double the industry average, so this also gets a 5. So for a profitability score out of 10, we have a 10 out of 10, a 100% profitability score. Next thing we have is growth. So for growth, we want to see revenue growth, earnings per share growth, and free cash flow growth. Again, let's go over to NYU Stern and figure these out. We have historical compounded annual growth rates by sector. Let's start with revenues here. So I'm going to Control F, farming. 6.84% revenue growth, 6.84%. To find EPS growth, we're going to go to the historical compounded annual growth rates by sector. And actually, I realize there's a mistake on here. I need to change this. Not earnings per share, it's net income growth. So going back, we have CAGR, so the compound annual growth rate in net income for the last 5 years, farming, 14.43. So you got the industry averages. We're going to go find the growth rates for DE. So for this, I'm going to quickfs.net. I'm going to copy and paste the revenues here into the spreadsheet. There's a calculations tab. I got revenue growth. I'm going to just paste that in there. So 8.4% revenue growth. So here we have revenue growth, 8.4%. For net income growth, I'm over on the income statement part. I'm going to copy and paste these in. And for net income, we have 23% growth. The last thing we have is the free cash flow growth, and actually I can't find a place where they have that listed, so I'm actually just going with over 10% for that one. So there's a few ways to do this. I don't always trust the free cash flow growth on some of these websites, so I sometimes will go to Yahoo Finance. I'll go over and I'll hit the financials tab. I'm going to hit the balance sheet tab because I want to see how many shares are outstanding. So I'm just going to copy and paste the shares outstanding. Next, I'm going to go find the free cash flow and the cash flow statement. So here at the bottom, we have free cash flow. I'll copy that, paste it in the spreadsheet. And so what you're going to actually see is you can't really calculate cash flow from a negative cash flow to a positive cash flow. So actually, this isn't going to work. So I'll try to find a workaround for this one. But for right now, I'm going to go with a 0. But in the future, we'll see if I can think about this one, think this through a little bit more and figure out if we can find a better way to do it. So for revenue, what's our score? For the net income, the score is more than industry average. It's a 5. And a 0 for free cash flow growth because we weren't able to calculate it. So we have growth at 67%. The final thing I have is a liquidity score. So this is a pretty easy one. We're just using the debt to equity ratio. Usually I wouldn't want this to be any more than 2. So let's take a look at that on Guru Focus. Here we have debt to equity. We have 2.64. So we'll type in 2.64. This actually gets a 0 because it's more than what I like to see. So for liquidity score, we actually have a 0. All right, so here at the bottom, we have the ranking score for Deere. So the total score is a 40 out of 60 to 67% is my Cat 5 score. Now, I want you to see something. So if for some reason I was able to go back and look at the free cash flow growth, and I saw that it was actually better than this, and I was able to put, let's see, a 5 here, then it would actually go up to 75. So this is what I'm saying. This part, I'm not 100% sure if I should be doing this. I think that this is going to be something I look into, this free cash flow part. But if I keep it at a 0, it's under 70. And the way I'm looking at this Cat 5 score is that I think something over a 70 is what I'm looking for. So that's what I'm thinking in this after some of the stocks I've gone through. So I don't think I want to invest in a stock under 70. This one is a 67. But let's go ahead. Let's take a look and see if we can figure out something on the free cash flow DCF. So I'm going to calculate a DCF using Guru Focus because they make it easy. They already provide you with some of the details. So free cash flow, as we know, we can't find a 10-year, we can't find a 5-year, but we do have a 1-year that's 7.5. So it's hard for us to figure out a free cash flow based DCF because we don't really have good cash flows. So considering where the stock is right now at $243, what would the growth rate, let's say, need to be for it to be fair valued? So if we go up, we just toggle this up. This thing's fair valued at around a 12% growth rate per year. So then you'd have to go back and say, well, can John Deere grow cash flows at 12% going forward for the next 10 years? And then there's a terminal value of 4% after that for the next 10 years. So that's what you have to kind of consider to yourself and say, is it possible? Is there something I'm missing here? Should I look more into the free cash flow? If I go back 6 years, is there positive free cash flows that I can calculate easier? So for this one, currently, just going through this quickly, we can't get a cash flow on this one. So I would not be investing in this because I want to be able to do a DCF on it, and I want it to have a score of over 70. Then we would just do technical analysis. So I'm not going to go through this too in depth because, of course, this isn't a stock I'd probably be buying considering of the fundamentals we just went through didn't pass the tests. But now we just have a quick little uptrend line here that it broke down through back in June of 2021. It's actually interestingly trading above both the 50 and 200-day moving averages. Could be acting as support. I would watch that to see if these prices end up trading down below these, so that's possible. And if it does happen, that could be a bad signal, of course. Looks like it's trading right around some support area of $365. which is a bit of a short-term support, but you can see back here there's some support here back then. There was resistance here, and now there's support. So there is some support here. I would watch this area, 368, to see if it does break down through that. If it does, it could definitely go lower, but I don't really feel like doing like Fibonacci retracements and stuff like that on this one. RSI is neutral, nothing to see there. Right now, MACD doesn't look anything like it's telling me anything bullish. So for this thing, I would basically wait if I was going to try to enter this, if I did think that this was a good stock to buy right now from a price perspective. As in the target price was good using a DCF and different things. So anyway, that's all I have for this. Please let me know if you like this video, if you're interested in like seeing this model. Do you think I missed some stuff? Do you like seeing these? Do you want me to do more of these stocks? Just let me know. I want to hear from you. And thanks so much for watching. I'm excited about the spreadsheet, the stock ranking system, the Cat 5 score. So anyway, thanks again, and watch another of my videos coming up on the end screen right now.